Home Depot is failing, and this morning we got news of up to 19,000 layoffs as the economy enters freefall. And this report we got from Home Depot is the worst it's been in 20 years, and this is going to have massive consequences for the economy and for the stock market. So everyone, why is the retail apocalypse getting worse? What companies announced these massive layoffs today? And what is this ultimately going to mean for you and me? Well, that's exactly what I'm going to go over in today's video. So let's not waste any time, ladies and gentlemen. Please like and subscribe. Let's get straight into the news, the facts, and the data. Well, ladies and gentlemen, it is getting worse by the day. Look at this. Home Depot posts worst revenue miss in about 20 years and lowers forecasts as consumers delay big projects. So that's right, this is even worse than 2008. And what I keep hearing is the consumer is so strong, their balance sheet is so strong, but the data does not add up. The data is saying quite the opposite. The home improvement retailer said colder weather and falling lumber prices also hurt first quarter sales. Its last quarterly miss of this magnitude was in November 2002. And after this news came out, the shares dropped about 5% in the pre-market. The company said it now expects sales and comparable sales to decline between 2 and 5% for the fiscal year. It had previously predicted roughly flat sales for the period. Its operating margin rate is also expected to come in lower for the year in a range of between 14 and 14.3% compared with previously expected 14.5%, including the effect of a $1 billion investment in employee wages. So this wasn't just a small miss in revenue, this was a big miss. And they're now coming out and saying that the outlook for the rest of the year is going to get even worse. Chief Financial Officer Richard McPhail told CNBC that Home Depot anticipated 2023 would be a year of moderation. After America's huge appetite for home improvement during the pandemic, the retailer's annual sales have grown by about $17 billion from 3 years ago, yet he said the anticipated pullback has been compounded by rising mortgage rates and a shift towards spending on services. So this is some very key pieces of information in this statement, everyone. He's saying the rest of the year is going to moderate. I think it's going to slow. Obviously, he's a CEO. He has to tell everything's going to be a hunky-dory when, again, the data's saying it's going to get much, much worse. And another key point he brings up is a lot of Americans, they already spent big in 2020 and 2021. They got their stimulus checks. They spent big on their home improvement, on appliances, on technology, etc. And they're no longer spending because they have everything they need. A lot of demand was brought forward and now that demand is collapsing. And again, they keep saying the same thing, everyone. The state of homeowners is that they're very healthy. They have a healthy balance sheet. They have healthy incomes, but I do think our professional customers tell us they hear this from their customers. There is that shift, even if it's temporary, from larger projects into smaller ones. Again, they're speaking out of both ends of their mouth here. They're saying that their balance sheet's so good, they're making so much money, but they can't afford to spend. So does this make sense, people? No, it doesn't. And it's not true at all. People's incomes are being absolutely destroyed to inflation. In real terms, people's incomes are falling, and also people's savings is falling to record lows, and credit card debt is getting record highs. So it's absolutely the opposite to what he's saying here. So this marked the second quarter in a row that Home Depot missed Wall Street's revenue expectation. Last quarter, the company fell short of analysts' expectations for the first time since November 2019. But there's a big problem. Now, Home Depot and its competitors now face more unpredictable outlook. Rising interest rates threaten to dampen the appetite of prospective home buyers and cool home values. So even Home Depot knows that the housing market crash has only just begun. A lot of people have been saying, where's the housing market crash? People, it hasn't even begun yet. It's about to get even worse. Groceries and essentials now take a bigger bite out of household budgets, and with COVID largely in the rearview mirror, Americans now weigh spending on travel, dining out, and other experiences when they debate a kitchen renovation or a new refrigerator. So that's exactly right, everyone. Groceries are now starting to make a bigger portion of people's spending. Utilities is getting much more expensive. Insurance, gasoline. People just don't have the amount of money and the amount of savings to buy these big ticket items anymore. Home Depot in the quarter sold fewer pricey discretionary items such as new appliances. He said customers might be putting off those purchases or may have already made them during the pandemic. Wednesday. Now, this report couldn't have come at a worse time for Home Depot because they've already been struggling and their shares are down 17% from the 52-week high. But this is the first piece of the picture, and I've got much more data and stories to go over. We're seeing retail get hit from all angles. Look at this. Target wants shoppers to think of it for groceries as a retailer braces for leaner spending. So like what Home Depot said, that a lot of consumers, more and more of their money is going on groceries now. Well, Target realized this. They know their sales are going to fall. Target is, going slowly bankrupt. And so they're now trying to step in, try to find other alternatives like now selling groceries. And it's going to be very interesting to see how their earnings go, and they're going to be released Wednesday. So like I've been talking about, company earnings are going to fall, and this is going to lead to more layoffs. And people, I was refreshing the news this morning, US times, this is the evening in Australia, and it seemed like every half an hour I got another announcement or breaking news that another company's announced more layoffs. Look at this. So Vodafone shares dropped 7% after record 11,000 job cuts as CEO says telco must change. So this is massive, everyone. Vodafone shares are absolutely tanking right now, down 7%, and they're also announcing absolutely unprecedented job cuts of 11,000 employees. And also what we're seeing right now is a huge shift from old money to new money. We're seeing a lot of the old retailers, they're going out of businesses. The e-commerce companies like Amazon is absolutely dominating and taking market share right, left, front, and center. And also a lot of the old telco and communication companies that had broad market share, there's much more competition now. They say our performance has not been good enough to consistently deliver. Vodafone must change. Vodafone said it will cut 11,000 jobs over 3 years out of a total headcount of over just 100,000. That is the largest round of reductions in the company's history. So we have Home Depot with the biggest miss in 20 years. And on top of this, Vodafone announced its biggest layoffs it's done in the company's history, but that's just the beginning. So the big banks are announcing mass layoffs as well. So Morgan Stanley Waste cutting 7% of its Asian investment bank job. It says China is taking the biggest hit as deteriorating relationships with the US and weaker economic growth curb deal making, people familiar with the matter said. So this is very interesting, everyone. We're seeing the relationship between the US and China get worse, and this is going to lead to more US companies pull out of China, but unfortunately this will mean more layoffs. The cuts are part of Morgan Stanley's plan to reduce about 3,000 jobs globally by the end of this quarter. This would amount to roughly 5% of staff, excluding financial advisors and personnel supporting them, within the wealth management division. Morgan Stanley has employed a bigger China team in Hong Kong than most of its rivals, making it vulnerable as deal activity slows. Now, while I was recording this video, I thought it can't possibly get any worse. But literally, as I was recording this video, I just got this article that more rounds of layoffs are happening. Look at this. Western Union rival Zeps laid off 26% of its employees as the fintech cuts continue. Did you hear that, everyone? 26% of the staff are going to get laid off. And these are a lot of good, high-paying jobs. That means all these high-paying tech jobs. It's not just this company. We're seeing this with Facebook, Twitter, Google. The list goes on. This is going to mean these people won't have the money to spend on the services jobs, and then they're going to lose their jobs. It's simply a domino effect. So the group said it's going to be laying off 420 employees, the company told CNBC exclusively. Zepsa has a total headcount of around 1,600, meaning the cuts translate to about 26% of its workforce. Zep said it was implementing what it called workforce optimization to account for duplication of roles following the combination of Sendwave with World Remit under one parent company. So I think this is going to be a trend with a lot of other companies. What we saw during 2020 and 2021, they went on a hiring frenzy. It was very hard to get staff. Nobody wanted to work because they were all getting free money. But unfortunately, this created a lot of bloat in a lot of companies. And we saw Elon Musk went into Twitter and he started slashing jobs right, left, front, and center. And a lot of other tech companies are going to follow suit. So I know what you're thinking. Well, what does this mean for the economy and for the stock market? Well, this article asks the same question: what Home Depot's poor outlook means for the stock market and the economy. Bottom line, the broader market implications of Tuesday morning's post-earnings stock move for Home Depot are going to be significant, and don't expect much improvement from home improvement retailer anytime soon. So why is it going to be so significant? Well, it's the most impactful retailer in the price-weighted Dow, having almost double the weight of Walmart since it's almost double the price. So this is why we're seeing a lot of pressure on the Dow at the moment. Home Depot makes up a huge percentage of the Dow, and it's more than double Walmart. And despite Walmart's much larger market cap, as we have highlighted yesterday, Home Depot has a greater index and earnings influence in the S&P 500 due to the Walton family hefty stake in Walmart that reduces its weighting in the main quarterly benchmark. So for those of you that don't know, the Dow and the S&P 500, they have a bunch of different companies in these indexes and they have different weights. So for example, you could have half of the index in the positive, but if 10 or 20 of the largest companies in the negative, the index and the indices are going to fall. Lowe's is also down 3% in the pre-market in sympathy, but it won't report results until next Tuesday. So what this simply means for the stock market is the Dow is going to continue to come under pressure unless we get a miracle today. This is also going to mean there's going to be a lot of other fear with a lot of other big retailers like Walmart and Lowe's, and that's going to put more pressure on the stock market. But more importantly, how this is going to affect you is this is going to mean there's going to be less spending out there in the economy. And this means these layoffs we're seeing now, this is just the tip of the iceberg. And this is why you cannot believe when the government puts out these reports to say that the unemployment rate is just 3.5%. That's absolutely baloney, everybody. We all know the real number is at least double that. And like I said, this is going to have a contagion effect. One person's spending, it's another person's income. So it's going to rapidly accelerate. And this economic downturn is just getting started. But everyone, this was a very important breaking news update. Tell me what you think down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.